to Agoracom's Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Okay, let's jump right in. Today, we're doing a rapid-fire deep dive into some really compelling small cap news. Our focus, strictly on the hard results, the financial and operational data that investors need to see.
That's right. We're looking for immediate signs of growth, validation, things like that.
Exactly. Across tech, silver, gold, even copper. The mission is simple. Deliver the key numbers, the catalysts that signal real progress and technical de-risking.
And what's interesting today is the quality of this news flow. We're not talking about vague promises. We're seeing, concrete proof points.
Like
Pilots that directly map to revenue potential or drill results that absolutely nail down high-grade continuity. For the serious investor, these numbers are basically the green light for doing more research. It's where you find those entry points.
All right, let's start with climate tech, specifically quantifying risk. We've got an update from AISIX Solutions, that's AISX, on the TSX venture. AISIX Solutions launches 30-day wildfire risk pilot with major Canadian insurance brokerage. That sounds like product validation to me.
It's definitely a critical step for their platform, Climate Genius. You have to understand, modeling wildfire risk isn't just nice to have for insurers anymore. It's becoming essential.
Right.
So this pilot, it's a 30-day evaluation with a major Canadian brokerage. They're testing it with up to 6 users, looking at the risk profiles for 500 insured properties.
500 properties. That's a decent sample size for a trial. But, 30 days feels quick. Is that really enough time to prove value?
It can be, especially when the path forward is this clear. The press release is explicit. A successful pilot leads directly to a paid engagement.
Okay.
And it's under a volume-based pricing model. That's the key takeaway here for investors. It shifts AISX from just development into, potential revenue generation.
Okay, let's unpack that volume-based pricing a bit. Why is that specific model so important, particularly for selling into the insurance sector?
Well, it really lowers the barrier to entry, doesn't it? An insurance company might balk at a huge upfront software license fee.
Sure.
But with volume-based pricing, they pay based on how much they actually use the platform, how many properties they evaluate, and crucially, only if it's actually working, if it's helping their underwriting. It aligns costs directly with value.
Ah, okay. So the risk for the brokerage is much lower.
Exactly. It basically screams product market fit if it works. So for anyone watching AISX, the absolute focus has to be on that conversion pilot to paid commercial contract.
Okay, let's pivot now from climate risk to geological risk and the hunt for high-grade metals. We're moving to mining, looking at Minaurum Gold Inc., that's MGG on the TSX venture.
MGG, yes. Alamos Silver Project.
The headline suggests they're building confidence. Minaurum reports more high-grade silver at Alamos, tightening case for a maiden resource.
This is exactly the kind of news release you want to see if you're hoping for a resource estimate. It's providing the hard data, the drill results needed to move beyond just exploration potential.
Right, towards something bankable.
Precisely. They need to show high-grade continuity, not just finding it here and there. This data supports starting that resource calculation at Alamos in Mexico.
So let's get to the numbers. What results are they reporting that actually demonstrate this continuity?
Okay, so from the Promontorio and Europa zones, look at hole AL25-141. It hit 4.80 meters, grading 287 grams per ton silver equivalent, or AG. That's solid.
Decent grade, decent width.
But inside that, they found a much richer core. 0.50 meter at an incredible 1,029 grams per ton silver equivalent.
Hold on, over 1,000 grams per ton.
Yeah, 1,029 grams per ton. Yeah, 1,029 gram key. That's over 30 ounces per ton silver. True bonanza grade.
Wow. Okay, that's a headline number. But is it just one lucky hit, or do other holes support this high-grade picture?
No, that's the point, continuity. Hole AL25-142 also delivered, showing 1.0 meters at 730 grams per ton silver equivalent. It shows the high-grade stuff hangs together.
So you're seeing consistency.
Exactly. These results suggest the geometry and the grade needed for that maiden resource estimate are there and reasonably predictable.
Okay, so translating this, what does it mean for de-risking the project from, say, a financial or development perspective?
Well, the immediate catalyst is obviously the maiden resource estimate itself that quantifies the asset.
Right.
But there's another layer here, a really important operational de-risking factor. The Alamos project already has production permits.
Oh, that's significant.
Yes. If this maiden resource looks good, They've potentially cut years off the typical mine development timeline compared to starting from scratch.
Yeah.
That simplifies things dramatically.
Let's stick with precious metals, but shift to gold and defining scale in Canada. We're looking at Gold X2 Mining Inc., trading as AUXX on the TSX venture. Their headline focuses on data certainty. Gold X2 extends high-grade zones at Moss, strengthening the case for near-term resource upgrade.
Right, and context is really important here. They're not just poking around. This is grade control drilling. They're using a very tight 12.5-meter grid spacing.
Which is quite dense.
It is, sometimes called mining level definition drilling. The whole goal is to get the data confidence needed to upgrade resources from inferred to indicated for their upcoming PEA, the preliminary economic assessment.
And these intercepts, they're shallow and thick, right? Which is ideal for open-pit mining economics.
Exactly. Near surface, wide zones generally mean lower stripping costs, better economics. Take hole MMD 25-227. It hit 69.65 meters, grading 1.63 grams per ton gold, starting right near surface, from just 4.35 meters down.
Almost 70 meters right off the bat.
Yep. And important, within that broad intercept, there's a higher grade section. 10.0 meters at 7.09 grams per ton gold. Really nice kicker.
Okay, so scale and grade confirmed, but maybe clarify for listeners this process of converting inferred resources to indicated. Why is that specific step such a big deal, financially speaking?
Well, that gets down to bankability and investment risk. Inferred resources are, let's say, more conceptual. They give you a target.
Okay.
Indicated resources, though, have much higher geological confidence based on tighter drilling. Financial institutions, major partners, they'll actually use indicated resources in feasibility studies and project finance calculations.
So it reduces the uncertainty significantly.
Drastically. It's essential for future, more detailed economic studies, and this is critical. It likely reduces the dilution assumptions baked into the upcoming PEA because the resource numbers used in the economic model are just more reliable. Banks trust them more.
All right, next up, let's look at a discovery that could fundamentally change a project's scope. We're heading to the Yukon with Banyan Gold Corps, symbol BYN on the TSX venture.
BYN, yes, the ORMAC project.
And the headline introduces potentially a whole new element. Banyan Gold confirms high-grade silver at ORMAC, adding a new dimension to a large Yukon gold project.
Right, and you need the bigger picture here. Banyan's ORMAC is already enormous for gold. We're talking over 7 million ounces combined in indicated and inferred categories.
Yeah.
It's a monster gold deposit.
Okay, so it's already significant.
Very. But now, this news validates the potential for high-grade, what they call Keno style, silver veins within that larger gold system. This isn't just trace silver. It's potentially a second marketable product.
Adding a whole second metal stream could be huge for project economics, for operational flexibility. What kind of grades are we talking about that confirm this silver potential?
Well, the grades are, frankly, eye-popping. While the project is anchored by the bulk tonnage gold, the silver numbers really stand out. They mention a historical hole, AX21-142, that hit 16.8 meters, averaging 1,841.14 grams per ton silver.
Whoa, okay, 1,800 grams per ton. That's nearly 60 ounces per ton. Like you said, that's not a byproduct credit. That's potentially a high-grade silver mine within the gold project.
Precisely. And the recent drilling confirms this style is present. For instance, hole AX24-542 hit 18.9 meters, averaging 11.22 grams per ton silver. While not 1,800 gram, it confirms the mineralization style is there.
So what's the significance of adding this high-grade silver?
It offers the potential for significantly better margins, maybe faster capital payback, especially when you integrate it into the mine plan for the large-scale gold operation. Remember, they already have infrastructure advantages like road access and grid power in the area.
Right.
So this silver could be, very high-grade icing on an already massive cake.
So the thing to watch for next here is
keep a very close eye on the assays that are pending for their newest high-grade silver intersection, hole AX25803. Those results will really tell us more about the scale and continuity of this dual metal potential.
Okay, let's wrap up with critical metals copper specifically. We're heading to Quebec, a top-tier jurisdiction, looking at AISIX Metals Incorporated, trading as OM on the TSS.
OM, yes. The Gaspé Copper Project.
The headline definitely emphasizes size. AISIX Metals extends Gaspé copper to the south and at depth, bolstering case for a large-scale Quebec copper asset.
And Gaspé is already known as one of Eastern North America's largest undeveloped copper resources. These results suggest it's getting even bigger. They're showing significant extension both downwards, deeper than previously defined, and also laterally off to the south.
Okay, let's hit the scale first. If they're claiming large scale, we need to see those really long, multi-100-meter intercepts. What are the numbers?
Well, the best example of that scale and depth potential comes from hole 30-1107. It intersected a massive 592.0 meters, averaging 0.46% copper equivalent, or TUQ.
Nearly 600 meters.
Yeah. And critically, this hole pushed the known deposit down to 1,003 meters vertical depth. Another hole, 30-1112, was even longer, 868.5 meters, averaging 0.30% copper equivalent. These confirm it's a very large bulk tonnage system.
Okay, massive scale confirmed. But sometimes the concern with these huge, deep systems is that the grade might be too low overall to make the economics work easily. Did they find any higher grade zones that could, sweeten the pot for a future mine plan?
They did, and that seems to be the story in the southern expansion area. That's where they hit the higher grade vector. Hole 30-1119 returned 46.4 meters, averaging a solid 1.100% copper equivalent.
Okay, over 1% copper is good.
Yes, but within that, there was an extremely high-grade core, 7.5 meters grading 5.35% copper.
Wow, over 5% copper. That's fantastic grade. Why does hitting pockets like that matter so much when most of the deposit might be closer to 0.5%?
Because those higher-grade zones provide crucial optionality for mine planning. They could potentially be targeted early on as, say, high-margin starter pits.
Right, generate early cash flow.
Exactly. Help pay back capital faster, finance the development of the larger, lower-grade resource. So having both the huge scale and these localized high-grade hits really strengthens the overall case. It supports their timeline for the next mineral resource update, which they've guided for Q1 2026. Hashtag tag outro.
Okay, let's quickly recap. We've covered a lot of ground, 5 distinct stories, really.
Right.
We saw AISX with a tech pilot setting up a clear path to volume-based revenue.
A really tangible path.
Then high-grade validation for MGG's silver and AUXX's gold, providing the data needed for resource upgrades, moving towards bankable status.
Political de-risking steps there.
Then BYN, where exceptional silver grades might create a whole new dual metal dimension for an already large gold project.
A potential game changer for Ormac.
And finally, OM demonstrating just massive copper scale extension, both deep and wide, but also hitting those important high-grade zones in a top jurisdiction like Quebec.
Yeah, scale plus great optionality. It's a strong combination.
So if you connect the dots, what's the underlying theme today?
I mean, the core theme is de-risking through hard data. Every single one of these companies is demonstrating progress by converting technical success, whether it's software that works or drill holes confirming geology, into measurable, compliant value.
Value that improves future economic studies.
Exactly, and secures financing, ultimately. They're actively lowering the risk profile for investors with these results.
Right.
So this really sets up an interesting question for you, the listener, as you do your own research. Given these very immediate catalysts we've discussed, AISX's contract conversion, MGG's upcoming maiden resource, AUXX prepping for its PEA, BYN waiting on those key silver assays, which of these initial results do you think offers the highest potential reward relative to that very next stage of technical de-risking?
Something to definitely think about.
Definitely something to consider as you dig deeper into these compelling stories.